My name is Jake. Welcome to the channel. For those of you that follow the channel, you know that I invest in a dividend growth strategy, and I'm very transparent. I share what I'm doing here on M1 Finance. I show the good days, the bad days, and over this last week, it's been a lot more bad and negative news going on lately than positive. If you also invest in the stock market, your portfolio may look similar to mine where you're down 10, 20% in some cases. In today's video, I want to talk about, what are some of the differences between investing into the stock market for a dividend growth strategy, where you're trying to invest for earned dividends and not so much the capital appreciation. The capital appreciation is great, but really what I'm looking for is to invest in a dividend growth strategy where I'm getting paid every single quarter, every month, where these companies that I'm invested in, that they're growing their dividend. And as I dollar cost average into my portfolio, as I have a larger stake into these companies, I'm going to be rewarded in the form of a growing dividend. Really, that's what I talk about on the channel. And in today's video, I want to compare what that would look like, what I'm doing here on M1 Finance, compared to investing into actual physical real estate and getting dividends from real estate. Now, that's what we're going to talk about on the video. But before I do so, I want to just kind of share something that maybe some of you out there watching the video might be kind of spooked by the market. And I'll tell you, it is kind of frightening with everything that's going on right now. I think for short-term investors, this is incredibly scary and frightening. But for long-term investors, this actually creates a great buying opportunity.
This is a short-term issue. Maybe a couple of months, but we're going to get through this and the economy will be a little stronger than ever. I look back at people who bought stocks after the crash in 1987, people who bought stocks after the financial crisis. For long-term investors, this will be a great investment opportunity.
Mnuchin is the U.S. Treasury Secretary, and a lot of people look towards him for guidance and, just reassurance that they're not going to lose everything tomorrow if they're investing in the stock market. And what I want to focus on for the remainder of the video here are a few things. So I want to talk about why I invest not only into dividends for, invest into companies for dividend growth, but also why I invest into physical real estate. And as well as I want to share with everybody how I was able to gain or to get a 12% yield on cost or cash on cash return through investing in physical real estate here in Austin, Texas. So really, really exciting stuff, as well as I'm going to go into the numbers of the investment and break everything down. And also at the end of the video, so stick around for this, I'm going to share what it would be like if I were just to invest into the stock market for dividend cash flow, or if I were to invest into real estate, what that dividend cash flow would look like. So stick around. It's going to be really interesting and you might be surprised. So why invest into real estate?
Real estate. You know why? Because real estate will make you money. You want to make money? Buy some real estate. Otherwise, you got a slim chance.
So why I invest into real estate? There's a couple of reasons. So the very first reason of why I decided to invest into real estate is so that I can accelerate my returns. Now, I'm not looking to retire after 60. I'm trying to achieve FIRE, which is financial independence, retire early. So I'm looking to retire earlier so that I can quit my day job. I can, live off of my dividend cash flow, but also my rental cash flow. Okay. And so accelerating the returns is one of the main reasons why I've decided to invest into real estate. Now, obviously real estate investing is much less passive than investing in the stock market. Yes, they're both passive income options, but with rental properties, there comes a lot more hands-on, there's a lot more things involved with it. It's a little bit less passive. And I'll talk about that here in a little bit. But, if you follow other channels, other FIRE channels, one of my favorite is with Our Rich Journey from Aman and Christina. And they shared a video that I watched, about a year ago, and it really stuck with me. I'm trying to pursue financial independence and retire early. And I'm not going to get there as quickly if I just solely rely on my 9-to-5 job. I'm really limited on how much I can earn. And so I really need to look for other opportunities to accelerate my returns. So that's the first reason of why I decided to invest into real estate. The second reason are really the tax benefits that come with it. all of the cash flow, the rental income that I get is essentially tax-free because of the way that the tax laws are set up here in the United States with depreciation and write-offs. All the net cash flow that I receive is essentially legally tax-free. And I absolutely love that. Another reason is diversification. I'm not just investing solely into the stock market or investing into one single asset class. I'm diversified that way. And then the last reason or fundamental reason of why I invest into real estate is really to hedge against inflation. As the US economy or the US government continues to print money, and, with quantitative easing, all the money that the government is pumping into the market and the economy, it's causing inflation. It may be low now, but I believe that inflation is only going to go up over time, and this is a way for me to hedge against inflation. Now, how did I yield a 12% on my cash investment? So this is really what I want to break down for the remainder of the video. So how did I get 12% return on my investment? Where if you look at my portfolio, I'm yielding just over 3%. And this 3% is greatly because the market has pulled back so dramatically. If you follow my channel, just 4 weeks ago, I was averaging right around 2.5%. So my portfolio has not always been yielding 3%. It's averaged right around 2.5%. But what I did is when I first started to, think about investing into physical real estate, the very first thing that I did is I did research. I went to Google, I researched, what were some of the fundamentals that I needed to know before investing into real estate. And really my source of knowledge came from YouTube. I was watching channels like Aman and Christina. I was watching channels like The Graham Stephan Show. I was watching channels like Meet Kevin, the Bigger Pockets channel, and Ben Mala, and there's a few others. But that was the very first thing that I did was I educated myself and started to learn, okay, well, what is this all about? I mean, anyone, for the most part, can go and purchase shares of a publicly traded company. Everyone can do that. But to invest into real estate, it's a little bit, the barrier to entry is a little bit higher, but it's not that high if you know what you're doing. And then, so the next thing that I did after educating myself was I started, making sure that I was working on my credit score. So if I were able to purchase a property, I was able to get financing. So making sure that my credit score was in great shape so that I was able to secure a mortgage on the property. And then really the next thing was making sure that I had a local realtor that I was working with. Somebody that knew the market, somebody that could help me through all the legal parts of the deal negotiation, all of that stuff, working with, the realtor has connections with inspection companies, knowing what to look for specific to the market that I was in. Because those of you that follow the channel, I'm not originally from Austin, Texas. So I needed somebody local that knew the market. And then the last thing here really was financing. I needed to make sure that I had a bank or a financial institution that was going to loan me the money. Like those are really the first steps of what I needed to do to get started so that once I did find the property that I wanted to purchase, I was ready to go. I was looking constantly, every single day for months on Zillow, on the MLS, through my realtor online, looking for properties that would fit my price range as well as geographically within about a 30-mile radius. I know that if you follow other YouTubers like Meet Kevin always talks about investing in a property that are within a 30-minute drive. That was something that I really wanted to focus on. And there was a couple months back towards the end of last year, a property came online, and it was about 20 minutes away from me. It was in my price range. And I called up my realtor and said, hey, let's go take a look at this today. It came on the market that day. We went over there and we were completely surprised that when we got there, there was about 5 or 6 other people that were there that showed up to look at the property. And that was for us a really good sign that there was demand, right? And the property was, built in 2007. It had normal wear and tear. Everything was pretty much fine. And the listing price, and I want to go through all the numbers here. Before I do so, on the outside, on the surface, everything looked fine. And then what we did is we went and kind of walked through all the rooms, and we looked at the exterior, see, okay, if there was any, damages like to the foundation or plumbing, everything checked out. It was just small cosmetic things with paint and so forth. And so what we did is we left the property, and we immediately started working on an offer. And we submitted the offer, and the next morning the seller accepted our offer, and we went through the negotiations. And it was really, really exciting. If you've never done this before, your heart's pumping 1,000 miles an hour, but it was so exciting. And that's why I'm saying you have to be ready, right? If you want to purchase something, it's not just you wake up tomorrow and you go and you purchase it. You have to have everything in place. I know that Ben Mullet talks a lot about this. Graham Stephan talks a lot about this. A lot of these YouTubers, they know their stuff. Everything that I learned and what I implemented in my process, I learned free on YouTube. Now, I know that there's other courses that you could purchase, but I didn't purchase anything. I completely consumed everything that I could consume to learn about, okay, what does it take to invest into real estate? Who's the right person? Is this right for me? Is this not right for me? And I'm so thankful that my wife and I, that we decided to pull the trigger and we bought our first rental. All right, so let's look into the numbers and see how this deal came to be. So the home was listed for $319,000. And when we went to go visit it, we didn't see any structural issues, anything that was really very alarming, just a few cosmetic things, right? And then what we did is we submitted an offer that day. The offer was accepted the next morning. We submitted the offer for $310,000. They countered and said, okay, we're going to do $315,000 plus we're going to fix one of the sprinkler heads, or one of the sprinklers in the back of the lawn that was broken. That was about $500. So we said, all right, fine. Everything is contingent, the inspection. And so then what we did is we had the property inspected. The inspection was just a little over $500. This was paid out of pocket by us, of course, right? So that we wanted to make sure that there was no major issues. And really the only thing that came back with the inspection was there was damage to part of the roof. Some of the roof was corroded, and we had to, if we were going to purchase it, we absolutely had to repair the roof. We didn't have to do a full replacement, but we had to repair it. The water softener was a little bit old. The other appliances were fine. Fridge, the HVAC, everything was pretty much in order. So there was no major structural issues or anything like that. And so what we did was, after the inspection, we sent a counter offer for $310,000 again. And that day, the seller accepted the offer, and we were golden. We were under contract. So then from there, we were looking to, secure the financing. We had 30 days to secure financing, and it wasn't an issue because, as I mentioned before, we had all of our ducks in a row. We knew that we had great credit. We knew we had the bank to back us. We had the down payment and everything. So let's go through and let's break down the finances of this deal. So the down payment we actually ended up paying 25% down, and we decided to go with 25 versus 20 because we got a little bit better of an interest rate, and we thought, okay, we're going to go ahead and we're going to do that because we didn't plan on refinancing in the next year or so. Knowing now that the rates are pretty much going down to zero, maybe I would have done that a little bit different looking back retroactively, but it is what it is. You can't change it. It's completely fine. I'm still very happy with it. So the down payment was $77,500. The closing costs to close out a title and everything out of pocket was there $3,500. The repairs for the roof, the cosmetic things, we also we stained the fence. It had a gazebo. We did a lot of ceiling stuff like that, more preventative stuff. We put in $11,000 to really proof it for everything. So, and then because we were working with a realtor and I had a relationship with a realtor, and we agreed, by using him, he agreed to share 50% of his commission, which is legally allowed up to 50%. He shared 50% of his commission with us. So that was a $4,000 realtor credit that our realtor gave to us. That was pretty cool. So out the door, out of pocket for this deal with the repairs and everything, we paid $88,000 out of pocket. So that was 25% of the purchase price, which was $310,000. And what we're getting in yearly cash flow, this is the exciting part, after all expenses, that being your taxes, your insurance, your, considering vacancy, lawn care, everything out of pocket. It has a small HOA, everything. It's cash flowing $6,360. And when I say cash flowing this amount of money, I really look at this as dividends. Now, a corporation, if you were to invest in a company like McDonald's, it rewards its shareholders in the form of a dividend. This dividend is derived from its revenue, its net income that it brings in. Now, the US government views rental properties as a business. Now, you can own a rental property as a sole proprietor. You do not have to have an LLC. And if you were to have an LLC, you could pay yourself through a distribution. A distribution is a dividend, right? So the cash flow from the rental property is, in essence, a dividend, right? And so I'm getting $6,360 in dividend cash flow from this rental property. This is where it gets exciting. 6,360 divided by 88,000 gives me a 7.2% cash on cash return. Now this is huge. And also this is huge because in Austin, Texas, we have higher property tax. Property tax is higher. It's over 2%, where in other parts of the country, now I know people in California are going to laugh at me and say, yeah, taxes in Austin, comparing Texas and California, but comparing other parts of the United States, property taxes are much higher in Austin, in Texas, because we don't have any state income tax. That is, that's where they get us, right? And so a 7% return is actually really, really good in my opinion. But 7.2% is not 12%. So where does the other remaining percentage come if I'm yielding 12%? Now this is where it gets exciting. Now, just because this is what I'm netting after all expenses, the 6,360, I'm also getting principal pay down. And this is what's called amortization. Now, every single month, the renters are paying off the principal of the loan. And on average, they're paying $4,260 every year, at least for the short term. That's going to actually increase over time. But right now, it's $4,260 in principal pay down and amortization. And that equates from, the $88,000, that's 4.8% cash on cash return, which gives us a 12% cash on cash return with this investment. Now, that is absolutely, for me, insane, right? With my portfolio here, I'm yielding, anywhere from 2.5% to 3%. And to take that and to get a 12% return on my investment, that for me, it just is mind-opening. It's just incredible. Okay, but really the excitement, the interesting part does not end there. So in Austin, Texas, the historical return of the last 10 years, now we've been in a bull market. During the financial crisis, the Austin market stayed flat. But over the last 10 years, we've averaged over a 5% appreciation on home prices. Okay, so 5%. Now, the interesting thing here is I'm getting 5% appreciation year over year, not on $88,000, the money that I have into the deal. I'm getting 5% appreciation on $310,000. So that is just incredible to think about. Now, that's really the power of leveraging your money, leveraging the bank's money. And the bank, yes, they're getting that interest, but I'm getting everything. I'm getting the tax benefit, I'm getting the appreciation, I'm getting the cash flow. Okay, and so that's why for me it makes sense. Now, obviously, with rental properties, there's more things that you have to do. You could always be called at night. Hey, I got this issue or I got that issue. Yes, that happens, right? We've had things where we've had to make adjustments to the lawn care and stuff like that, where a renter has issues with that. But really, it's been all manageable. I don't use a property manager. I'm doing it all myself, and I don't think about it every single day. It's very rare. In the last, 4 or 5 months that I've had this rental property, I've only had one issue where I actually had to go and repair something. And it wasn't that big of a deal because I was prepared. I had a network. I had people that I could call that could help support me. I didn't go into this blind. Okay, now, but that's not the end of it, right? So the mortgage interest on this loan is 3.75%. Now, if you consider in with inflation right around 2.2%, give or take, that's going up and down every single month, obviously, but effectively, if you take the 3.75% mortgage interest rate and you subtract that from the inflation, I have essentially just 1.5% in interest that I'm paying when you factor in everything. Okay, so effectively a 1.5% interest rate on this deal. All right, and now this is where it gets really interesting. If you've stuck along with the video this long, this is really what I've been highlighting and what I wanted to focus on. When I look at my investments or the opportunity that I had, I could invest everything that I had, the down payment, into my portfolio, or I could invest it into the property. Now, this was the decision that I had to make last year. And the reason why I made the decision was because of this. If I invested the out-of-pocket, the $88,000 into my portfolio, I would yield annually at a 2.5% rate, $2,200 in annual dividends. That's where my portfolio was yielding at the time. Now today, with the market pullback, if I were to invest the $88,000 today, I would have an annual dividend cash flow, $2,640. With my rental property, the cash flow that I'm generating, remember the $6,360 in yearly cash flow, or the dividends after expenses, plus the principal pay down, the amortization of $4,260, that equals out to $10,620 in annual cash on cash return. Not just cash flow, because it's broken down with the principal pay down. The $6,360 is just the cash flow. But the total of $10,620, that is the annual return that I'm getting from my $88,000 investment, which equals out to be a 12% return. Okay. Now, if I wanted to get $10,620 in annual cash flow from dividend investing, now this is where it gets really interesting. At a 2.5% rate, if I were to invest into my portfolio, I would need $425,000 to get the same return today. If I were to invest this at a 3% rate in my portfolio and to get $620 in annual cash flow and dividends, I would need $350,000 at a 3% rate. That is incredible. And that is what I meant with at the very beginning of the video when I said, this is why I invest into real estate as well as into dividend paying companies, because I want to accelerate my returns. By doing so, I immediately increase my cash on cash return and immediately increase the acceleration of my returns of my investments. Now, this is obviously a long-term investing strategy, but I immediately, turbocharge my investments by doing so. Now, yes, investing in real estate is not for everyone. I've learned, it's been really learning by doing for myself here, but if I were to go back, if I could go into my make-believe time machine 6 months ago, would I do this all over again? Considering what I know today, right? I had to go over the property. It's less passive. There is more work involved. On the weekend, I'm doing things. I'm doing things late at night, right? If I look back on everything that I've done here, would I do it again? My answer would be absolutely. I know this is not a real estate investing channel. I'm really focused on dividend growth companies, and that's what the channel is for. But everybody, that is how I was able to get a 12% cash on cash return through investing into real estate here in Austin, Texas. I hope that this was helpful. Like you, if you're watching this video, if you've not yet invested into real estate, consider it. I would tell you it's not for everybody, but if you do hustle and if you do want to accelerate your returns, I think investing in real estate as well as in dividend growth companies is a great way to grow passive income or cash flow. Thanks everybody for watching. If you're new to the channel, I'd invite you to subscribe, like the video, and I will catch everybody in the next video.